Hello and welcome to today's webinar. Today we're going to be talking about quarterly taxes. I know paying quarterly taxes is really annoying and frustrating for a lot of people, trying to figure out how much they need to pay each quarter, making sure they do it on time, making sure that they save the money. And so today we're going to talk about, if you're an S-corp, a way that you can actually skip paying quarterly taxes and hopefully make your guys' life a little bit easier. So to kick us off, I mentioned it a little bit already, but the headache associated with quarterly taxes and why I brought this up in the first place is it's a headache that 4 times a year we have to calculate what you need to actually set aside for estimated taxes. Now, you do get like those forms that you can submit as far as how much to pay quarterlies based on last year's tax return. But if you're having a really good year, then that's not going to be enough money, and you're going to need to save even more for taxes on top of this. So maybe you pay those quarterly taxes, but then you're going to end up with a big tax bill at the end of the year, or you need to be updating every quarter how much you're setting aside. So it can get a little bit chaotic and stressful. Also, there is a penalty risk. So if you underpay and you do just pay it at the end of the year when you have to pay your taxes, you actually do have to pay a penalty for any of the time that didn't line up with when you earned the income and when you should have paid the estimated taxes. So sometimes the penalty can be pretty small, but other times if you don't pay any quarterly taxes, it can actually end up being quite a bit of money. But anything is more than what you want, right? We don't want to pay more than our fair share to the IRS. So having unwanted penalties is really not necessary, and there's ways that we can avoid it. Also, it is a big cash flow disruption. So a lot of people will set aside, say, 30% of their income into an account for taxes. So you have to move all this money into an account every month or every time you get paid. Then you liquidate that account to pay the quarterly tax bill, start it all over again, and rebuild it back up. So it's just this big process that we don't want to have to deal with. And it's a mental burden to be keeping track of this, making sure that you're setting aside enough money and trying not to have any penalties or miss any deadlines. We don't want to have to deal with that. So the solution to this, and really the reason why I said S-corps only for this, is that you can actually adjust your salary that you pay yourself, so your W-2 income, to pay your taxes throughout the year where you don't have to do any type of quarterly tax payment. To explain or walk you through a little bit further, if you're an S corp, you probably have your income being paid out from your business accounts to your personal accounts through two different formats. The first format is you have a payroll company where you pay yourself a consistent monthly salary every 2 weeks or first and the 15th, whatever you have set up. But you pay yourself payroll through a payroll provider, and then you get the money on your paycheck transferred to your account. Now, the second way that you get money sent to your personal account is usually what we call an owner distribution, where you just go in your business account and transfer money from your business to your personal. There's no payroll or anything associated. You're just moving money whenever you want, and that's moving like the profits of the business into your personal accounts for you to be able to spend. So when you have a payroll set up and you have paychecks coming out every month, you probably notice that, for example, if you did like $5,000 a month that you're paying yourself, you don't actually get $5,000 a month to your personal account. And the reason being is because the payroll provider is pulling money for your self-employment taxes and your income taxes, and they're paying the IRS for you from that withholding. Now, it's helpful that they do that a little bit, but the numbers that they have is only what they see from their end. So if you're paying yourself, say, a salary of $5,000 a month, that's how much they think you make. They don't know that you're also making another $10,000, for example, on top of that, that you're not pushing through the payroll provider. So because of that, when they do their automatic tax withholdings for you, they're assuming you make $60,000 a year, even though you could be making $150,000 or $200,000 a year. So they're not withholding enough from those paychecks. And that's why you have to still do quarterly taxes on top of that. The nice part about having a payroll provider and having paychecks coming out is that you can go in and increase your withholding whenever you want. So you can go in there and say, instead of holding a total of $1,000 for taxes, I want you to actually withhold more and keep extra money for my tax bill. And you can choose whatever amount you want as that extra withholding. And then the payroll provider is going to keep that extra money and they're going to pay the IRS for you and pay that tax bill. So, how do you calculate how much that you should have coming out of your withholding? I thought today's fitting being tax day. Hopefully, you guys have all filed and got all that done for 2025. And if you have, you can go on there and see if you go on your Form 1040, which is your tax return, and look at line 24, it's going to say your total tax bill that you owed on the federal side. So you look at that tax bill and say, okay, let me give you an example. $50,000 is what you owed. So you owed $50,000. Then you subtract out any withholdings that's currently happening from your paychecks. So maybe your paychecks already have $1,000 of taxes being withheld. So you already have that covered. And then look at what the remainder is. So what's the difference between the taxes you owed last year and the amount that's automatically being withheld from your paychecks? Once you get that number, then you can divide it by how many paychecks you have. So say if you're paying yourself monthly, it'd be 12 paychecks a year. And then that will tell you how much to add to your withholdings for your tax bill. So I do have an example if seeing the numbers makes it a little bit easier for you. So let's assume that you had an income of $180,000 gross. Now this would be after business expenses. So this is just what's left over that counts as income for you. And let's say $50,000 is what you're paying yourself as a salary, the W-2 that's going through the payroll provider. So when you looked at that, you saw that your current withholding was exactly what I mentioned, was $1,000 a month that was already being withheld from your paychecks through the payroll provider. So now we can see that your tax bill for 2025 was $45,000 total. So you had 12,000 was already withheld from your paychecks. And so that means that you had $33,000 extra that you had to pay that you probably paid in quarterlies, or you got hit with a tax bill when you went to file your taxes at the end of the year. So if we look at this 33,000 and we divide it by 12, then that's going to bring your extra withholdings to 2,750. So think about it this way. You are going to be paying yourself a salary of $50,000 per year, but 45,000 in total is going to go towards your tax withholding, and the payroll company is going to pay the IRS for you, and they're going to do it on a monthly basis. And then the other 5,000 is what you'll actually get paid out to your personal account. So this is going to make your paychecks really small. That is something to keep in mind, but we don't really care because even though your paychecks are really small, we're just going to say that you can transfer more as an owner distribution. So if you want to pay yourself $10,000 a month of total income, maybe before you were getting 3,000 from your, or it would be 4,000 here from your paychecks, and you were getting $6,000 that you were just transferring over every month. Now, after you do this strategy, you're only going to get $5,000 a year from your payroll provider paid out to you. So you're going to need to pay yourself around $9,000 a month from just transferring money from your business to your personal account. So the actual math of what you're doing is the same throughout the year. The main difference is that number one, it's coming out of your payroll from your payroll provider. So you don't have to worry about setting the money into a savings account and setting it aside and worrying about whether it's there and ready to go. You just have it automatically taken out from these paychecks that you're paying yourself. And then you also have the payroll provider paying the IRS for you on whatever you owe for your taxes. So we don't have to save any more money for quarterly taxes, and you don't actually have to pay the IRS and worry about those deadlines because you're doing it automatically every single month. So that's it for today. Hopefully that makes your life a little bit easier. If you want to talk about your unique financial situation, how much you need to be saving, I would be happy to look at your tax return for you and see based on what you're paying yourself, how much you would need to increase your withholdings in order to be on track for this. So feel free to shoot me an email. My email's down here at the bottom. But if you were looking for a step-by-step instructions, pull your tax return, look at line 24, and figure out based on that calculation on the last slide what you need to be doing. Call your payroll provider and ask them how you can update your federal and state tax withholdings and to get that updated as soon as possible. And then some payroll providers have you file a new W-4, which a W-4, all that is where you put in what you actually want withheld. So it's like a nice easy way where you just fill out this form and say, I want an extra $1,000 withheld, and you give it to the payroll provider and they do everything for you. Or you may need to actually just go in and manually make the adjustments. It just depends on if you have a bookkeeper or how hands-on you are with your payroll and paying yourself every month. And then lastly, cancel those quarterly reminders. We don't have to worry about it anymore. You got money set aside every month, and hopefully this makes your life a lot easier going forward and really just one less thing to worry about when it comes to taxes and managing your cash flows. All this stuff's just going to be happening automatic for you. If you have any general questions, feel free to leave a comment on this video. Or again, if you want to talk about your personal situation, feel free to reach out and we can set up a meeting to chat. Other than that, I hope you all have a great rest of your week, and I'll see you all next time.